Good day, YouTube. This is Jay Money with Falling Forward Financial. I've just come across this article. I talk a lot about dividends here on the channel, along with other stuff, EVs and MJ, all kinds of different stuff. But I like to diversify, so therefore I pick up dividends when I can. So, but down between 11 and 62%, 3 Reliable Dividend Kings to buy and hold for decades to come. So that's usually what I do when I buy them, is hold them for the long term. And but this is 8 hours ago. So although the stock market is forward looking, there is something to be said about legacy companies with a track record for earnings and dividend growth. So, and Dividend King. So a Dividend King is an S&P 500 component that has paid and raised its dividend for at least 50 years. That is huge. So just think if you would invest in some of these, or if somebody bought some stock for you when you were born, basically, or just a couple years old and held it for 50 years, just think what that would turn into. Investing in equal parts Stanley Black & Decker, SWK, 3M, MMM, and SJW Corp, SJW, provides a dividend yield of 3.7. And here's what makes each company worth looking at. So, Stanley Black & Decker, just about everything that could go wrong with did for this tools and hardware company in 2022. Its commodity and cost inflation was much higher than expected, mainly due to the ongoing supply chain issues, so, and the lovely pandemic, which has just ruined everything. So I was reading an article earlier that Biden said we're no longer in the pandemic, but yet the CDC says we are, so who knows. Finally, poor weather in the summer led to weaknesses in its outdoor range in the year when it was integrating its acquisition of MTD Lawn and Garden Products. So it's been a tough year for Stanley Black & Decker, which has been reflected in the stock price. So the stock is down 62% from its all-time high. As a result, having started the year forecasting full adjusted earnings per share of $12 to $12.50, management now expects just $5 to $6. Ouch, half of it. Low of the new guidance range easily covers the company's $3.20 dividend per share, currently yielding 3.7. Management thinks it can hit $7.25 next year. Meanwhile, the company is launching a fundamental restructuring expected to result in $2 billion in cost savings. So very cool. 3M, everybody's heard of 3M. You probably have tons of products at your home from 3M, paper, whatever, filters, masks, you name it. Facing legal challenges due to acquisitions that sold defective ear protection to the U.S. government. Ouch. Ouch, ouch, ouch. Defective ear protection. That's probably not as bad as defective eyewear, but still bad enough if you're wearing them thinking you're not going to go deaf and you end up going deaf, and that's with the U.S. government. So also dealing with the ongoing costs related to use of per PFAS chemicals, also known as forever chemicals, in its end products, and for contaminating groundwater with PFAS. Estimated costs related to legal repercussions of these two issues vary widely, so feel free to pause and go over the rest there. As bad as the situation appears, 3M does have some things going for it. So I've heard a lot of YouTubers talking about ones who do talk about dividends. They always talk about 3M. You get a little bit of appreciation, but not much, but basically in it for the dividend. So I did a video earlier on some telecommunication on AT&T, talked a little bit about Verizon and T-Mobile, so those are my favorite dividend stocks. So I don't have much of 3M. Here, as you can see, their earnings, cash flow have exceeded its dividends for the last 20 years. So So the orange is the cash flow, purple is the earnings per share, and blue is dividend per share. So the way this looks, they could even increase that if they wanted to. So down 55% from its all-time high, trading near a 9-year low. Ouch. Now could be a good time to reach into the bargain bin and take a look at 3M stock. That's just down huge. Higher yield makes this ticker the king among water-oriented dividend kings as SJ Group. Between market volatility, escalating inflation, and geopolitical tension, investors have a lot on their mind these days. Any of those conditions could motivate investors to shift their focus toward conservative stocks. By all three, there's a perfect time to consider fortifying one of the portfolio's low-risk utility stock that provides some passive income. So if you wanted to diversify, you could get into all three of them. So one of the three water utility stocks with a regal title of Dividend King, SJ Group, distinguishes itself from its peers, California Water Service Group and American States Water, by offering the highest forward dividend yield of 2.2. California Water Service Group and American States Water each offer forward dividend yields of 1.6 and 1.8 respectively. In addition, SJW Group plans to invest $1.3 billion over the next 5 years to upgrade its water and wastewater infrastructure, subject to regulatory approvals. Once complete, these capital expenditures should assist the company in expanding its profit margin. But that is the three: SJ Group, SJW Group, 3M, and Stanley Black & Decker. So if you have any of the three, you can list that in the comments, and if you have any other favorite dividend stocks, you can list that in the comments as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.